As inflation continues to rise, investors are increasingly looking to real assets as an alternative to the stock market for market-beating profits. Now, to some, those real assets include gold, Bitcoin, and even luxury watches. Of course, we are all familiar with the concept of investing in luxury watches and how much profit can be made from a single watch on the secondary market. However, there are some who believe that any and every investor should stay miles away from investing in luxury watches. Now, before you take a stance, you might want to hear what we have to say. First, everyone knows that the secondary market for high-end timepieces has suffered alongside the collapse of the global economy. The crypto market crash last year reportedly flooded the market with Rolex and Patek products, according to a piece published by Bloomberg. However, we want to look at things from the positive side first. Watch collector and investor Kevin O'Leary, unlike many, equally has a more positive outlook. Kevin has this to say on his take against the anti-inflation bill. I've been listening to this dialogue now for a year about how watches are going to roll over. It simply hasn't happened because the demand for watch pieces, particularly the brands of Rolex, FP Journe, AP, and even Omega, recently has had a huge run. While he acknowledges that the popularity of watches has declined, he finds that he still uses them frequently. He continued saying, "If you've owned these watches for 24 months, it's still outpaced the S&P and still outpaced crypto. It's the best asset class to have been in the last 2 years." To many listeners, Kevin discussed his 3 hard assets, and as we've just heard, luxury watches alongside gold and Bitcoin are included. On the other hand, Morgan Stanley, a US financial services firm, released a statement to investors discouraging them from trying to make a profit through the purchase of high-end wristwatch brands, including Rolex, Patek Philippe, Audemars Piguet, Tag Heuer, and Omega. The statement read, "We have noticed a significant increase of watch inventory in the secondary watch market year to date as a result of second-hand watch dealers and individual watch investors offloading their stocks. Given the current watch inventory for sale and the worsening macro backdrop, we would expect second-hand prices to contract further quarter over quarter." Interestingly, the assumption that the supply of luxury second-hand timepieces still outweighs the market for such items was a central theme of the speech. More so, Watch Collecting's spokesperson Adrian Halewood told WatchPro that the reporting on pricing, which has dropped in recent months, has been grossly inaccurate. He said, "An advertised price is meaningless without an achieved sale. The market will set the value. Price and availability will always fluctuate, and the only way to protect yourself is to buy what you really like, at a price you can justify to yourself. If the value of your watch shifts up or down, you don't care because that's not the reason you bought it." And we agree with this take on price and availability. According to data released by Yahoo Finance, popular Rolex models have had a 21% price drop from their April 2022 highs. And according to a report published in July by IDEX, the stock market, the widespread decrease in the value of the cryptocurrency market, rising interest rates, and inflation may all have led to a slump in the secondary watch market. But it isn't that simple. Nothing ever really is. Anyone who has paid even passing attention to the luxury watch industry over the past few years has witnessed amazing activity across several sub-markets, such as the secondary market for previously owned watches and the viral popularity of individual models and even entire brands. This is occurring despite market conditions that would normally herald a significant slump in the business. So, folks, there is also strong evidence that watch purchases are on the rise among certain groups of consumers, most notably the group called the new middle class in the watch industry. Because we feel this is a debatable matter, allow us to provide a few keen observations. The new middle class in the watch industry consists of people who, by other standards, would be considered upper middle class. You may think of them as entry-level rich, since they fill the bill for upper income earners but lack the means to spend $100,000 a year on wristwatches alone. The watch industry has successfully pivoted its marketing efforts to this new aspirational demographic, and these buyers account for a sizable portion of current sales. Let's take a moment to dissect the underlying psychological motivations of the newly wealthy. A prototypical aspirational buyer is a non-complacent person who wishes to improve themselves in some way, whether it be in appearance, status, or accomplishments. But here's the thing. When you make a purchase or undertake an activity to become more like your ideal future self rather than just the person you currently are, you are engaging in aspirational consumption. Luxury buying, regardless of price point, is built on the principle of aspirational consumption. The key to being a good marketer in the watch industry or any other luxury arena is to understand the intricacies of what consumers desire to be and how they seek to feel that way. Rather than flaunting one's newfound fortune, one of today's most common consumer goals is to preserve one's established social and financial standing. When asked what they wanted to say to the world, most luxury shoppers a decade ago said things like, "I'm rich now," while persons who suddenly became affluent often flaunt their good fortune. An alternative kind of showing off that seems to be gaining popularity among consumers is the statement, "I'm still wealthy." The prevailing consumer mentality then is to convey a more subtle "I am among the rich" rather than an overt "look how much more money I have than you" message. Consumers' desire to distinguish themselves from those at the bottom of the economic ladder appears to be the driving force here. One interpretation of the widening wealth divide is that many individuals are less able to afford luxury items, like watches, as a result. This is correct, and it's one reason why the conventional middle class is not a good target market for many luxury companies. Do you see the point here? But on the other side of the wealth divide is the greatest group of people who are buying luxury watches today, and they have even more disposable income to spend on their hobbies. Additionally, rivalry among status seekers in the same consumer class is growing more intense. Rich people who spend their money openly on luxury items have likely noticed that their pals have upped their game in recent years. The wealthy can spend more and more extravagantly as they get even wealthier. Listen, buyers of expensive goods often engage in a form of social competition based on perceived social standing. If everyone in your socio-economic group suddenly spends $30,000 on a watch, you may need to spend $35,000 or even $50,000 on each watch to maintain social standing. Those who aren't trying to show off will nonetheless feel pressure to spend more on their watches to send the message that "I'm still doing pretty well," even if they aren't trying to show off. Even though worldwide growth predictions look bad, high-end consumers in closed communities can easily afford to boost their expenditure on watches in the current economic cycle. Now let's discuss a second, though related, explanation for the success of wristwatches amid the economic downturn: the relatively new designation of wristwatches as financial assets in the minds of many consumers. These days, few shoppers would even consider purchasing a timepiece without at least mulling over its potential future resale worth. But then again, we think it is best wristwatches are purchased for pleasure and never for investment. Yet, no one can deny that the average modern buyer of a high-end watch cares about how much it is worth to them. The value of a watch may be dependent on its present market price or on the hope that it may become more collectible in the future. The belief, real or imagined, that a wristwatch represents an investment is a major factor in the current market for wristwatches. Considering a timepiece like a financial asset might help consumers rationalize purchase more, which is especially crucial during a bear economy. A lot of people buy timepieces for themselves as a guilty pleasure. Luxury watch buyers are less likely to make showy purchases that betray how little money matters to them because of the widespread belief that doing so is unpleasant. The values that motivate the latest iteration of this behavior make all the difference. Today, the message conveyed by donning an expensive timepiece is, "Look how savvy they are with money since they adorn themselves with objects of great market value." This runs counter to the common perception that the wealthy can afford to fritter away their resources. Socially, both of these ways of wearing high-end timepieces send quite similar messages, but the difference is in the moral justifications behind them. There are major and serious concerns that have far-reaching consequences on the global economy, such as difficulties with transportation and production, wars, feuding countries, and even economic recovery following the pandemic. Especially within yesterday's core group of middle-income luxury customers, these will have to continue to have negative effects on traditional luxury watch sales and production. Nevertheless, despite the advice of conventional economic forecasting models, the widespread use of wristwatches has been enabled by the internet's role in the marketing and distribution of high-end goods. In light of these new realities and luxury consumer patterns, I hope this essay has helped to identify significant ways and reasons why the luxury watch industry can expand or even thrive. Drop your 2 cents in the comments section. While we believe that it may be a risky step to invest in luxury watches this time because we can't exactly ignore the data, we also believe that the luxury watch industry, against all odds, will continue to thrive and maybe expand. But be warned that this is not financial advice, just hopeful thinking.